What's up, clan? IslandTraderFX here. I hope the weekend has been good to you. We're back with another video, and hopefully you do enjoy it. Today, what we're going to be looking at is knowing when to switch direction, or knowing when your trade is changing bias. Oftentimes, we get the direction of the market to a T. For example, when you look at a bullish market, you know for a fact that it's a bullish market, right? You will see certain things that ID as a bullish market. If you look at a bearish market, you know for a fact that it's a bearish market. Why? Certain PD areas are holding, whether it be fair value gaps, whether it be order blocks, whether it be highs or lows, you know for a fact whether it is bullish or bearish. And of course, you would enter the trade based on the trend, right? What about knowing and understanding that the trend is about to reverse? This is something that people oftentimes cannot tell, and unfortunately, not being able to tell when the trend is reversing, or not being able to know for a fact that the market is now about to move in the opposite direction, it would prevent you from capitalizing on a new trading opportunity that is about to unfold. And this is essentially what we're going to discuss in today's video. So stick around and let's see what the chart has to offer. We did take a trade on, I believe it was Euro GBP, and there is a typical example of knowing and understanding when the bias has now changed and taking advantage of it. So let's head over to the charts. Ciao. Okay, so now that we're on the charts, let's get straight into it. Earlier when I said Euro GBP, it's actually GBP NZD. All right. So on GBP NZD, what did I see? Let's first start with went bullish. I was bullish first, and then after that, I was bearish on the pair. So let's look into what I saw that motivated me to go bullish first. Bear with me. I have a slight congestion right now, so sorry for the sniffles. But let's head straight into it. So on the monthly chart, of course, clear as day, you have a bullish order block, right? As you guys would know, order blocks is something that I rarely use. It's kind of second to my fair value gaps, etc., and the other PD areas that I look at. But this time around, I said to myself, you know what, why not? Monthly order block, let's go with that. So you could definitely see price has been rejecting off every time it comes into this monthly order block, right? So on the daily, let's just quickly jump down to the daily. This is what I saw. You had price coming nicely into the monthly order block. You had an expansion to the upside. Of course, with that expansion, they did leave behind a bullish fair value gap. Price came back into this bullish fair value gap, disrespected it. So what I was looking for is I wanted to see a candle close above this high right here. And we could see on whatever day it was, I guess it was Thursday, we got a bullish close above this. So essentially all of this at the top here is chopped. That's a consolidation. So my thought process was, how can I capitalize on this consolidation, right? You could see you had price coming in here, pushing up back to the lows, pushing up back to the lows, pushing up back to the lows. So I said to myself, you know what? Well, price, of course, it's definitely failing to break that low. So what I would do is when price comes back into this low, I'm going to go long. Of course, I'll put my stops below these lows right here. Essentially, you know, anytime you have a consolidation like that, the lows or the highs, it's liquidity. Let's just be real, it's liquidity. So I was actually taking a big risk. I did not want to go ahead and put my stops all the way at the bottom here. I placed it here, right? So I did something like this, went long somewhere here, stops somewhere under here, and then my TP was all the way on top of here. So a nice big trade, a nice big 1:3 2.6. Why? Of course, I always target the highs, the close of the highs, and I was targeting a daily close at the time. As you could see, it pairs up nicely. So when I realized that price was not going to when I realized that price was not going to play out the way that I expected it, I cut my losses short. I did not take a full loss. I cut my losses short, okay? And I was looking for bearish opportunities, right? So right here, of course, within that consolidation, if you do know what the market cycle is, I highly suggest that you look it up. Don't want to go too deep into it. But of course, after consolidation, you have an expansion, either to where the upside or to the downside. So you had a beautiful expansion below these lows right here. Of course, that expansion would take out all of the liquidity resting above here, resting below here, right? And when I saw that, I said to myself, man, I think it was on the 1 hour. I was looking at it, not 100% sure, but it had to be either on the 4 hour or on the 1 hour, right? I wanted to see price close. Well, price showed me, not that I wanted to see price showed me. That is how I was able to go ahead and switch my bias and go ahead and go for a shot and capitalize on that shot. So price, let me go back to the 4 hour. Price push all the way down here. You could see there was at one point there was a 4 hour close right here, right? And with this 4 hour close, what did it do? It left behind a 4 hour fair value gap. So that was like ding ding ding, bright idea right away. I said I had a consolidation right here. I had an expansion to the downside, to the point where, it's not any ordinary expansion. They are leaving behind fair value gaps, right? Of course, that has to be filled. So all I did, I wait for a retracement back up to the back into that fair value gap. I waited for a retracement. I'm not 100% sure which time frame I took it on, if it was the 15 minutes or what it was. But I waited for a retracement into that fair value gap. I placed my stops above these highs right here. And where did I target? I didn't want to be too greedy because already my initial bias was bullish, right? I'm now seeing a bearish opportunity, so I'm not going to go for these lows at the bottom here. You understand? I went for a 4 hour close. And where was my nearest 4 hour close at the time? This was my nearest 4 hour close at the time right here, this low. Okay, so price retraced back into the zone right here, into this fair value gap. Of course, the fair value gap overlapping with the lows from the consolidation. I covered my high right here, and this right there was my TP, and you had price falling nicely into the zone beautifully. As a matter of fact, I saw another opportunity on that trade. I think it was, I'm not 100% sure if it was the following day or 2 days after. Like I always say, price is fractal. What you see on one time frame, you'll see on a lower time frame, or on another time frame. On the 1 hour, we had a consolidation again. You had price break below that consolidation. There was a small fair value gap somewhere, if my memory serves me right. I know for a fact there was a small fair value gap somewhere. However, you had price coming back into that consolidation after the expansion to the downside. And what did price do? They tapped that low once more. I did not take that trade, but just showing you how price is fractal. But that was my whole thought process. So that is something that you will learn with experience. You wouldn't be able to just do that off the bat. I mean, if you look at the market and you figure that, hey, it's bullish. It's giving a lot of bullish characteristics based on the highs and the lows, based on the PDRAs that it is presenting. You know for a fact that it is bullish, right? If all of a sudden you're seeing that those bullish PDRAs are not being held the way that they should, they're being disrespected, and then you're seeing bearish PDRAs coming into play and it's being respected, of course, with experience, you know when the market is about to shift to the opposite direction, and you could capitalize on that, right? So that is something, like I mentioned, that is going to take a while for you to learn. My advice is to stick to your bias for now, especially if you're just starting out. Later on, when you get more comfortable with just the overall flow of the market, then you could try these things out. But that's about it for today's video. This was how I was able to um, wait for the market to provide me with more information before I go ahead and flip my bias, and of course I did capitalize on that. But that's it for today's trade, and I hope you guys have a good one. If you did learn something, of course it's free of charge to leave a like, it's free of charge to comment, and it's free of charge to subscribe, so please feel free to do so. Ciao.